JT here, TickerMonkey.com. I wanted to circle back onto something I was talking about just the other day with habitual open equals low candles and wick setups. Now, this is Netflix, and Netflix is one of just a handful of names on our watch list that experienced a gap down on August 5th on that panic Monday. That wasn't open equals low. Now, ultimately, on a weekly chart, it turned into an oops reversal OEL week. But I want to talk about this concept that I've found in some names that exhibit an open equals low, but then there's a persistence about it. You'll find it have another one and another one and another one. And as you can see here on Netflix from August 5th, it had the open equals low at 587.04 and had a decent move that day. Now, it didn't have an oops reversal because it didn't take out this low, but a delayed reaction. Now, on this run up, it had 4 open equals lows. It had 4 wick setups, and 2 of these wick setups were actually combined with an open equals low. We call that a WOEL. That's a wick setup OEL. It's a combination. I'm a big proponent of candle combinations, and these are some of my favorite. These are momentum situations, but these are the types of setups that demonstrate clear demand. It's a forceful type of demand. When you have something that opens up the day and the low is equal to that open, there is a buyer, a big buyer, several big buyers, but it is a situation to where they are buying the open, they're standing their ground, any form of supply that comes, they are soaking it up. And generally, what it is, it's a take and bid situation. The bid is lifting, the offer's getting taken, the offer's lifting, the bid is lifting right with it. Um, a lot of times people will ask me, how do you know it's going to be an open equals low day? How do you know it's going to stay that way? You really don't know out of the gate, but there's different time frames that I use for opening ranges. The first one being 3 minutes, and then 13 minutes, and then another one higher up. But the further along you go during the day, and these opening ranges continue to hold, you may use a 15-minute, you may use a 30-minute, you may use a 60-minute. By the time you're getting on out into the day, if that open equals low is still holding ground, your odds are increasing that it's going to hold for the day. Now, a lot of times you'll see one of these run, hit a full ATR, bend back over, and sometimes that may be it. It may end up undercutting later in the day. But it is a very strong indication of demand right out of the gate. We have additional studies, we have databases and different studies that we've run on these at TickerMonkey with my partner that does my database for me. And we've got a lot of proprietary information around this stuff. I'm not going to divulge that here because that's part of our edge, and it powers some of the algorithms that we run. But what I'm going to share with you here is the power of paying attention to this stuff. And you can see here that you had another one here with this wick setup. Now, a wick setup is a similar type of thing. It's you're gapping up or you're opening up in this prior day's wick. Now, what happened here was towards the high, sellers came in, pushed it down, it closed there. Now, the thinking behind that is you may get some continuation selling the next day. Now, when it gaps up in this wick, that is demand. That is the elephant standing its ground. And, the traditional pivots when you break through this high. In this situation, when you get an open equals low in combination with it, that's when you can really look to that low time frame opening range, and you can really gauge your risk. You can control it more tightly, and you can get a trade on even quicker. You don't have to wait for it to break this high. you can get involved in here and you know quickly where your failure point is if it starts to violate that. Now, a wick setup is not really dead until it violates that close over here on this bar. So there's room. It just depends on how you would want to do your stop. Of course, your sizing's based on your stop. So it's however you run your risk show. But that's what this is. This is a wick setup OEL combination, the WOL, we call it. And this popped out very well. Now, the next day, this is also a wick setup. Now, it did pop out, but it dropped back in. But you can see it never violated into this body. So it stayed alive the next day, came on again. Here's another OEL. Now, what you'll notice with these OELs is what's happening here. It's never challenged. This is not challenged again. This is not challenged again. This one up here is not challenged again. So you've got this very strong demand kicking in. And you can see here, here's another wick setup that popped out successfully. This here is another wick setup OEL. It's just a very strong piece of demand. And usually what you'll see around this stuff is you'll see ATR movement. Now, what this is telling me now is this bull flag, which, I can come over here real quick and just pop up something like market surge here. And you can see how it's got this cup with handle look here. Now we're isolating, we're looking at this area here. You can see how on a bar chart, you are not going to pick up the details that I am showing you on the candlesticks with this. But you can see here, this gap up over here, how it had the good earnings, ran up, it ran into a little bit of trouble on these earnings, gap down, but you can kind of see how it held its ground. What is that low? 537.07. You can see this low here at 542.01 held above this gap day low. Recovered, new high. You've kind of got similar basing structures here that are 6 weeks each. 15 and 16% depth. So you kind of got this ascending structure that's happening with Netflix here. But what we're going to look at here real quick is two things. A measured move. So 711.33 minus 587.04. And that's going to give you 124.29 for this measurement here. Then you're going to take the low of this flag here at 678.63. You're going to add that 124.29 to it, and it's going to give you a target up at 802.92 up in here. Now, another thing, I'm a huge Fibonacci practitioner. Love the fibs. So what we like to do on this type of thing is we're going to measure this out too. And let's see, that was 587.04. We'll do this. I didn't want to have it marked up. I didn't want it to clutter the chart from what I was showing with the open equals low and wick setups. But we're going to put that there. We know we have a measured move of 802.92, but now we can see we have extensions here. So when this thing breaks over, if and when it breaks over 711.33, it has extensions 740.66, 758.81, 773.48. So I'm looking at that. This is a really well-formed bull flag. You can kind of see today when it popped, it ended up, look over here, it ended up 115% ATR at the high of the day. It ended up settling back 42.8% ATR. So it had a strong ATR move, but you'll get a lot of traders that like to take profits intraday when things hit an ATR, unless there's some type of a catalyst out there that's really, really driving something. That's generally a good thing to do if you're just trading. Now, position trading is a whole different game. You don't want to get into that whole thing of, putting on a position and trimming if you're a position trader. But if you're a trader, the type of movement that we've had recently, there's a lot of ATR movement going on. It's really good for traders. I've been having a good time with it. So anyway, but there's what we're looking at there. So not to ramble on, I'll keep this short, 10 minutes. That's what we're looking at here with. I think that this is a really strong bull flag. You can call this now a handle on that cup with handle base, but this movement up off the bottom, you know, this is a big liquid name. It's very difficult to create an open equals low situation on big liquid stocks. So when you see these things, whether it's intraday, large time frame on these really big liquid names, it's unique. It is unique. Um, we have a study that goes back and we've looked at over, on both OEHs, which is an open equals high. There's one actually showing right here where it's an open equals high and open equals low. We've got close to 1 million instances that we've studied. We have a very robust data set on this stuff. But, and then, we talk about it at TickerMonkey in the chat. So if you're interested in that, come on over. It's stuff I'm not really divulging out into the public. But it's a very strong indication of demand. The open equals low, and there's implications for it for price movement and all that we've quantified. And in addition, we use it on gaps and that sort of thing too, on the days following gaps or gap days themselves. All sorts of good stuff happens around these things, and it's just something that I didn't pay attention to many years ago until I had an instance where I was in a stock and noticed it and thought to myself, wow, I've seen that before. I went back and pulled those names up, and you know, I've had many, many aha moments over the course of my career, and with Fibonacci's, with candle combinations, and this is just putting another, arrow in the quiver. So I'm a big, big fan of these things, but for this, with that measured move at 802.92, just something I was looking at before I jumped on here. Um, I'm kind of thinking maybe, when you look at what the ATR is now, 16.76, and um, you think about 2, 4, 6, 8, 10, 12 days it took this thing to run up 124 points, basically. If you divide this by that 16.76 ATR, that's like 7.41 days. And so when I look over at the options and I think, if this bull flag really breaks out, if NVIDIA crushes it and the market really starts to break, the cues especially start to break into new highs, how quickly could this thing run to that measured move of 802.92? So, I pulled up the chain over here and I'm looking at the September 800 calls, which, you know, are a 2-cent delta. So basically they're priced like they're worthless. But, if this thing starts to break out over 7-Eleven, those could start to see some speculation. Now there's 23 days to expiration on those. You'll lose some days here and there over the weekends. But just looking at that, those are 40 cents. So for a cheap speculation play, I may consider looking at those September 800s. I really, hold on a second. Let's take a look a little further out. Just a monthly. Hold on, got to scroll several hundred points here. Yeah, see you double the time on those and go out to October. Those 800 calls are $7.75. So just a little speculative play. Those may be worth the speculative play there, but for me, just trade the stock, or maybe you can, in situations like that, you can trade the stock, make a profit, and roll your profit into a cheap option like that. And if it hits, you really leverage up that little trading profit that you made. Pull, what is it? Pull, you know pull $400 or something like that on a trade, roll it into those calls, see if you can leverage it up, or you bust it out. You know, that's the idea when you do a lotto trade like that. You know, I like to try to take something out of trading the stock first and then roll those profits into something like that to, you know, further leverage that gain that I've taken. And you're not risking any principal, you're just risking the profit. You know, you could have left the trade on here and risk the profit like that, but then, you know, at the same time, you've got your principal exposed too. So if you get a gap down or something crazy like that, you got your principal exposed. So trade the stock, rip some profits, roll into some calls, free roll the profit that way. That's one way to do things. There's many ways to do things in the market. No one way is the right way. The only really correct way to do things is to always manage your risk and always define and respect your stops. That's how you stay in the game. That's how I've been in the game 26 years. You know, you don't want to be a boom buster. You want to be here so you can be at the PC to play the game every day because you never know what the opportunity is going to be. I had no idea I would be focused on Starbucks of all things, but that's how things went. And I'm in a Starbucks trade right now. But anyway, I'm rambling. That's a little bit on open equals low. If you want to learn more about this, we have a lot of data about it. You'll find out that all the people in TickerMonkey in the chat are focused on open equals low, Wick setups, oops reversals, 3-bar breaks, all day, every day on the biggest leading growth stocks in the market. And you'd be surprised. They do them all the time, every day. But people don't pay attention to this stuff. Like, see this right here? This was a little oops reversal that pulled back down, but it didn't go far. So not that big of a deal. But anyway, you can see right here, this was this little flag starts to come back and it gaps up this day. This was a wick setup, but then it failed. But you stabilize back and you hop over this little, little supply line. Like the way you would do a TD line is you want this low, or excuse me, you want this high qualified by a low the next day. So you can kind of construct across these tops here. So you had a legit trend line break on this flag today, which is why you got the 115% ATR move. But anyway, I hope you got something from it, and consider coming over to TickerMonkey, TickerMonkey.com. We do a lot of great things there. More of this to come.